Have you watched the financial news lately? I mean, it's a shit show out there. Interest rates are at highest level in 15 years. The stock market has taken a dump. 401k balances are down at least 20%. The real estate market is on a brink of collapse, or at least that's what the headlines are screaming. And of course, layoffs everywhere, especially in the tech sector. The best one-liner I heard, or I think I read somewhere, was that America is never going to recover from this. But on the flip side, some politicians have denied that we're in a recession at all. But if we use the textbook definition of a recession, it seems as if the R word cannot be avoided. Everyone's been talking about it. And you know what this reminds me of? It reminds me of 2008, when apparently the US was going in a depression. Don't get me wrong, there was plenty wrong back then, and there's plenty wrong right now. But usually during these recessions, there's a wealth shakeup, a wealth transfer. You hear things like the rich get richer and the poor get poor, which is not incorrect. But behind this reality, there are average people like you and I who turn out significantly richer. What I'm saying is, during these downturns, there's plenty of opportunity for regular people to build wealth. So what are these opportunities? Let's start with my favorite, real estate. The recent increase in interest rates could have a detrimental effect on real estate market. Higher interest rates mean that borrowing is more expensive, which could cause potential buyers to rethink purchasing a home or investment property. Qualifying for loans is already difficult for many people, and this situation will only be made worse as fewer and fewer people qualify for loans. We might not necessarily see a huge drop in real estate prices, but rising rates could make it more and more difficult for prices to stay at these current levels. So what does this mean for you as an investor? If you're an investor with some cash on hand, this is great news. Chances are you will find a lot of motivated sellers. As a matter of fact, I called two of the largest builders here in the Dallas, Texas area, and they're already offering all sorts of buyer incentives. One of the builders is offering a rate lock at 4.5% if you sign the contract, with some other incentives as well. While the second builder said that they will cover a bulk of the closing costs if you use their lender. And if you remember, just a few months ago, the market was so competitive that the buyer had no negotiation power at all, and there were no incentives, or barely any incentives. So the market has softened quite a bit, and it will likely continue to soften even further. If you've been thinking about investing in real estate, now might be the perfect time to buy, or at least get some cash ready to make a purchase soon. With the recession pushing prices down, this could be an opportunity to get a great deal on your next property. Also, foreclosure activity should start picking up again. During times of economic downturn, it is common for an increase in distressed homeowners as individuals lose their jobs or face financial challenges. It may also be tempting to consider purchasing a home at foreclosure auctions near you. Of course, there's the ethical side of foreclosures that holds a lot of people back. And that's understandable, and I'll leave that up to you. Personally, I've been on a hunt for a few single-family homes ever since the market softened. And I'm still looking for the past 2 or 3 months. But I do anticipate making an offer soon. I'll keep you guys updated. And for what it's worth, I highly doubt there will be a housing market crash as demand fades because of a recession and higher interest rates. But more and more opportunities are going to present themselves. Look for those bargains because they are out there. As with most recessions, we are seeing a sell-off in the stock market. Keep in mind that the stock market usually starts to recover before the end of the recession. One way to benefit from a falling market is to take advantage of dollar cost averaging, which involves making regular investments over time. If you're already using this method by making monthly contributions, you may want to consider increasing your contributions. Dollar cost averaging involves making regular investments in a security, such as an ETF, over a period of time. When you use this method, what you're really doing is lowering your overall cost basis in a security's share price. Let me break this down with an example. If you invest $500 a month in an ETF with a share price of $25, your investment will buy 20 shares. If the overall market is falling and the share price of this ETF drops to $20, your investment will now buy 25 shares. As a result, your account will now have 45 shares with an average cost basis of $22. I hope you're understanding what the benefit is. As the share price decreases, your $500 investment will buy more shares and your cost basis will continue to drop, which is a good thing because when the market eventually recovers from this recession and the share price goes up, your investments will be worth a lot more because your average cost basis is $22 and not $25. Dollar cost averaging can be a good strategy, especially for long-term investors who don't want to constantly monitor their investments. Here's a list of all the ETFs that I'm purchasing every week. VOO is my largest holding. I discuss all the ETFs that I own in this video, so be sure to check it out. Although starting a business may not be for everyone, a significant amount of millionaires are business owners. While the idea of starting a business during a recession may seem intimidating, there can be advantages of going against the trend. During times of economic downturn, many businesses may reduce their marketing and advertising efforts and lay off employees, creating an opportunity for new businesses to enter the market and establish a position with less competition. If you're not ready to fully commit to a new business, you may want to consider starting a side hustle to test the waters. As a new business, especially if it's a side hustle, you may be operating from your home with a small team and low overhead costs. This can give you the opportunity to offer cost-effective solutions to customers who are looking to save money during an economic downturn. And as the economy improves, you may want to consider increasing your prices. It's normal for the economy to experience ups and downs, and recessions are just part of the cycle. In fact, the United States has had a long history of economic growth, with an average recession lasting only 10 months out of the 13 recessions since World War II. Use these recessions to your advantage. But at the same time, it's important not to make impulsive decisions simply because the country is in a recession. The bottom line is, whether you choose real estate, starting a business, or index funds, recessions can be a great time to increase your personal wealth. Don't get too caught up in the short-term fluctuations and stay focused on your long-term goals.